This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 14th, 2016. Our time is 8:43 Mountain. Our radio show runs Sunday afternoon, 3 until 4 on 630 CHED. We are on a little early from, in fact, today, 2:30 to 3:30, prior to the face-off show as the Oilers play the Buffalo Sabres. Now, next week, we are on from 10:30 a.m. until 11:30 a.m. before the Oilers and Jets game at 1 o'clock and the face-off show. Keep that in mind. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. You can connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Coming up, we have information on rare colored diamonds in the second half of the program. And we'll be talking about the Hancock Red, because our featured diamond of the week is a .22 carat pear-cut fancy red argyle. See it online at rarecoloreddiamonds.com, featured diamond of the week. And in the second half of the show, we will talk about diamonds and the Hancock Red, which is a legendary diamond. In our free weekly newsletter, we invite you to connect with Harold at rarecoloreddiamonds.com. Get your name on the list. We'll be happy to send it out to you via email, free of charge. We have a great article from Jared Dillian. Get long the United States and go short Canada. And as Harold always says, I'm Canadian, he's Canadian, we love Canada. This is nothing personal. This is just, where do you position your money to maximize and protect it the best you possibly can? And Harold believes, as Jared Dillian does, get long the United States and short Canada. And we have seen that here in the last little while. If you may remember on a past show, Dillian said the Canadian dollar will continue to drop. The Canadian dollar is facing major headwinds. Dillian notes it's likely that the U.S. Fed will raise interest rates, while the Bank of Canada will leave rates where they are or possibly cut rates. This dynamic will put more pressure on the already weak Canadian dollar. High and rapidly growing consumer debt in Canada is also a concern. Also the housing market, oil prices, and if economic news continues to be poor, as has been the case over the first 6-7 months of the year, then that is a concern. Dillian thinks the Canadian dollar could move to 160 to 170 to the U.S. dollar. It's currently trading around 130. He believes that shorting the Canadian dollar is one of the best macro opportunities over the next couple of years. And Dillian states that more interest rate cuts by the Bank of Canada could be in the cards. With the prime rate in Canada at 0.50 right now, it's not far from zero. In fact, he wouldn't be surprised to see negative rates by the second half of 2017. But Harold, we've talked about Jared Dillian before. Get our free weekly newsletter. We have that article, Get Long the United States and Short Canada, and read the other article as well about the Canadian dollar going to 160, 170. And I know the Canadian dollar versus the U.S. dollar went down, Canadian down, U.S. up. We're up around 98 on the U.S. dollar right now. So you were correct on the gold and silver market coming down. A lot of people definitely didn't see that coming. You did. And now we're starting to see your prognostication on the U.S. dollar start to come true as well. So we congratulate you on your call.
Well, thank you, Randy. Again, it's only good information if we take advantage of it, and fortunately we are. We're doing tremendously well in this market. So the thing is that we've seen gold get as high as $1,375. I think we are the only analysts that were saying that gold was going to drop back down to $1,050, $1,100 in that area. And basically, we're now down to $1,250 this morning. In actual fact, we broke the $1,250 level and hit a low of $1,246. So there's support in the market at $1,250. just like there was at 1,300, 1,310 in that area. Once gold broke 1,310 and then broke through 1,300, the market came crashing all the way down to, again, a low of 1246 this morning. Right now, we're trading down about $3 on the day, trading at about 1252. What we need to see is two closes in a row below the 1250 level, and that's going to take us to the next line of resistance, support. Minor support in gold after the 1250 level is 12 and a quarter, then 1200. 1180 is more important. 1180, the market should stall out and maybe rally a little bit from there. But all in all, with this huge commitment of traders report, with the fact that the U.S. dollar is rallying very strong, which is one of our top predictions, everything is falling into line. Now, again, this is just a short-term situation. We're not trading gold. I'm not telling anybody to short the gold market or to short the U.S. The Canadian dollar or go long the U.S. dollar. Those are all risky trades. What we do is we trade the market much more conservatively. For the last 4 years, I've been begging my clients to get out of the Canadian dollar and buy U.S. dollar-based investments, and that's going to prove to be the biggest winner for us because, again, if the U.S. dollar goes to 110, which I believe it will, and the Canadian dollar goes to 160 to 170, which I believe it will, we're going to make about 50% return on the currency alone, let alone what we're making on our investments, which are over 25%. So, again, at this particular point, you've got to understand the currency markets in order to make money in these markets. You don't want to trade anything at this point. You don't want to trade in the commodity markets. 90% of the people that trade commodities lose their money. You certainly don't want to be in the stock market or mutual fund market. Again, similar, 90% of the people that trade those markets lose their money. So why in the world would you want to trade unless you're an expert trader? Those are markets you want to shy away from. What we want to do is catch a trend. We've been very, very successful over the last 15, 16 years at catching the biggest trends in the markets. For example, back in 1999-2000, it was our recommendation on CHED Radio that told all of our listeners to get out of stocks and buy physical gold at $250. $250 gold, it rallied all the way to $1,900. We had clients that literally became millionaires because of the gold market. We did a similar trend in the oil market. We caught oil all the way up from $20 all the way up to $150. It was one of the biggest money-making opportunities that we've ever seen. And then we saw the market come from $150 all the way back down to $30, and we caught a major part of that. Our biggest trades are in the currency markets. You need to understand currencies if you're going to make money in today's markets. And the fact is that most people don't understand currencies. Fortunately for all of our listeners, that's a market that I've traded for the past 35 years and have done tremendously well understanding what's happening in the trends in the currency markets. And what I see happening is very strong. I see that the U.S. is the only country right now that can raise interest rates. That means that the U.S. dollar will remain stronger than every other currency. We also saw a massive decline in the British pound, where the British pound is going to be level with the U.S. dollar, and throughout history, the British pound has been the strongest currency. It's actually traded 40, 50, 60% higher than the U.S. dollar. And at this point, we're going to see the U.S. dollar and the British pound at par, and soon we're going to see the U.S. dollar worth more than the British pound. All of our clients in Europe may want to contact us because you're going to want to get out of British pounds and euros, even at these levels, and get some money into the U.S. dollar, because the U.S. dollar is simply going to skyrocket. It's going to break the par level, and it's going to go to 108 to 110. And again, my clients right now are properly situated in those markets. And if you're not, you need to contact me. It's not too late. We still have an opportunity to make a tremendous amount of money getting into the U.S. dollar and getting some money out of the Canadian dollar. So what I see happening short term, and again, this is short term when it comes to gold, is that I see gold breaking the 1250 level, which it already did today. Next week, we'll see two closes below the 1250 level because, again, the U.S. dollar right now is strong. The U.S. dollar is up 30 points. It's trading at 97.81. There's minor resistance at the 98-cent level, but we're going to break that, I believe, within the next week or two. So there's a direct correlation between the U.S. dollar and gold. When the U.S. dollar is strong, gold is not a great investment. And that's what the scenario is right now. The U.S. dollar is gaining strength, and the gold market is selling off. There's no inflation. No countries can raise interest rates except for the United States. Everybody's dropping interest rates when the U.S. is planning to raise it. So what does that tell you? It tells you that the U.S. dollar is the reserve currency. It will be the strongest currency. And if you don't get into the U.S. dollar now, you're going to miss out on another opportunity. I know that a lot of people kick themselves. We're famous for predicting the gold market to go from $250 to almost $2,000. Very few analysts ever called that trade, and it was done properly on the Canadian radio stations because of our show. And we see tremendous opportunities coming in the marketplace, but not to trade with leverage and not to even trade. It's a buy and hold type of situation. We have private investments that are outside of the banking system, outside of the stock market, outside of the mutual fund markets that are very conservative but pay over 25% a year. I know that sounds impossible to believe, but these are private investments that we allow our clients to invest with us and be partners with. On top of that, we're going to make a lot of money in the currency also. We could make as much as 50% return on our currency and returns of over 25% on the actual investment. So if that's of interest to you, you need to give us a call so I can explain to you what the correlations are and how these programs work. But at this particular point, I see the Canadian dollar falling further. I see the U.S. dollar strengthening tremendously. I see short-term for the gold market to come down. And once we get back down to around the $1,050, $1,100 level, we're going to be major buyers of gold again. We want to see this double bottom come in the gold market, and I'm almost positive that we're going to see that within the next 6 months' time. So, again, at this particular point, don't speculate. Don't leverage positions. Don't take unnecessary risks. The fact is that most people in this type of economy will never, ever get to retire. With interest rates at 0.5%, there's just no way in the world that people are going to retire because in the United States, as an example, 75% of people in the United States have less than $10,000 to their name. Less than $10,000 to the name. That's 75% of the population in the United States. On top of that, again, with interest rates down at almost zero, there's no return on your investment. If you have $1 million sitting in the bank, do you realize that you'll make $5,000 a year in returns on interest? You're going to get 0.5%, and when you take into consideration that you're paying taxes and inflation, you're literally losing money. Then on top of that, in Canada a few months ago, they passed a C-15 bill that allows bail-ins, which means that the government, if the banks go under, are not going to bail out the banks. They're going to take your money as a depositor, and they're going to steal your money. You've got to understand what's happening in Canada right now. With these bail-ins, that's one of the worst situations you could ever ask for. Never keep more than $100,000 sitting in any bank account in Canada, because if that bank closes down, anything over $100,000 they're going to keep. And the Canadian government has just passed that law. It's called C-15. Look it up. It encumbers other situations, but the most important thing to me was the fact that the Canadian government, which owns most of the banks, are not even going to bail out their own banks. And with the problems in the real estate markets right now, and the oil markets, and the overall currency markets in Canada, it's a very rough situation. If you don't know what's going on and you're concerned about what your options are, please give me a call. As a listener to the show, I'll sit down and talk to you over the phone and go over your finances and your business investments and what you're doing, and try to help you get on the right track, because if you're not, you're going to be like everybody else. 90% of the people in this type of market are going to lose their money, and that is not what this radio show is all about. We've been on for going on 17 years now and have given tremendous advice and some of the best market trends have come from this radio show, and we've got several more coming up. So please get in touch. Let me explain to you how you can make over 25% a year and make that money in American dollars. It's something that we need to take care of at this point.
Connect with Harold, 1-800-432-1022. 1-800-432-1022. RareColoredDiamonds.com is the website. Now, we are on today. Normally, our show runs 3 until 4. We're on 2:30 to 3:30 prior to the Oilers face-off show as they play the Sabres tonight. And next week, we're going to be on 10:30 a.m. to 11:30 a.m., and that will be prior to the Jets game that the Oilers will be playing, and the face-off show once again at 11:30 a.m. The game is at 1 p.m. Get our free weekly newsletter. Keep yourself up to date. You can go through our free weekly newsletter in about 5 to 10 minutes, be completely up to date on the financial and geopolitical news of the week. You can spend hours if you want, but the main thing is it's a companion to our radio show, and you can see the articles that Harold and I are talking about, including the 2 articles we recommend you read. Jared Dillian, Get Long the U.S. and Short Canada. Also, Jared Dillian, Canadian dollar will continue to drop. And there's a video in those articles that you can watch of Jared Dillian talking about the situation in Canada. Get our free weekly newsletter. Connect with Harold, RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week. We will talk about diamonds coming up in the second half of the show. We'll also talk about the Hancock Red Diamond. But go see our featured diamond of the week right now, RareColoredDiamonds.com. Featured diamond of the week, a .22 carat pear-cut fancy red argyle. It is absolutely outstanding and the rarest of the rare, a museum piece. Now, Harold was talking about getting money, if you're a Canadian, out of some Canadian dollars into U.S. dollars. And if you're a Canadian, a snowbird who goes down to maybe Florida or Arizona, somewhere down in the United States to get away from our 10 to 15 centimeters of snow we're going to get, completely understandable. But one of the things that has really changed is the currency. Obviously, here in Canada, not too long ago, we were at par with the United States when it came to the Canadian dollar. Now, here we are today. The Canadian dollar is worth about 75.5 cents. Now, you can see how this impacts you as you live in the United States, as they are seeing how it impacts them, the British expats living in Europe. The falling pound is crushing retirement dreams of expats of Britain. The pound's dramatic decline is threatening to spoil the golden years of retired Brits living abroad. Popular retirement communities in Spain and France face an uncertain future. Pensioners have seen their spending power fall dramatically since June as the pound slumped 15% against the euro, and it had a flash crash last week of about 6%. Hundreds of thousands of British retirees rely on UK government, company, and private pensions to make ends meet. But the monthly payments are made in pounds and must be converted to euros before being spent. This works well when the pound is strong, but the currency has been crashing since the UK voted to leave the European Union. We remember that vote, the Brexit vote. To give you an idea, a pension of £500 a month is worth 655 euros as of June 23rd. Now it's just 555 euros and going down by the day. And to give you an idea, and we have this in our free weekly newsletter, UK pound plunges more than 6% in a mysterious flash crash last week. And they're actually saying that they believe that pound-dollar parity is a possibility. You can read more about that in our free weekly newsletter. But Harold, there is a prime example that we as Canadians can look at. Those, the Brits, getting paid, obviously living in different countries like Spain and Portugal and Italy, maybe France as well, and you can see how their dollar, their currency, is impacting their retirement. And if you're a Canadian with all your money in Canadian dollars, not U.S. dollars, it's something to consider and speak with Harold personally and privately about some of the investments that he has in U.S. dollars. So if you're living in the United States, you can be making some money in the United States and not affecting your retirement. And Harold, obviously people can connect with you, 1-800-432-1022, rarecoloreddiamonds.com. You have plans in place where people can start making money in U.S. dollars immediately. And Harold, we have about 5 minutes left in our first segment here.
Well, that is true, Randy. Again, you really have to understand the currency markets. Just prior to the Brexit decision, we had put some strategies on because we knew that the move in the British pound was going to be extreme either way. So the fact is that people that did nothing in Britain just prior to the Brexit decision lost over 25% of their net worth in one day. If your net worth was in British pounds, that's how much the currency fell. That's how much you lost. Now, again, what it basically means is you would only see that when you travel to where their dollar is stronger than yours. For example, as Canadians, if we go to the United States, it's going to cost us $1,320 to get $1,000 worth of U.S. dollars. That's how the currency markets work. So the Canadian dollar is trading at 132 at this particular point. That means it would take 1,320 Canadian dollars to buy $1,000 in U.S. So that's what I'm talking about. The fact is that soon it's going to be that it's going to cost $2,000 Canadian to buy $1,000 U.S., and I'm predicting that it could actually be that it could be more than that. So the fact is that if you just sit in the currency and do absolutely nothing, you're going to find that your buying power, your dollar buying power, has less and less and less power. What we need to do is take some of those Canadian dollars and get them into a U.S.-based investment that, number one, is going to returns to you that you're going to make money on, and then when you convert the American money back to Canadian, when I tell you to do that, you're going to find that you're going to pick up 30, 40, 50% on the currency also. It's a very exciting opportunity, and again, if you're looking at things through the way that most people are looking at them now because they don't have the opportunity, the fact is that most people can never retire because you're not making returns on your money in the stock market or in commodity markets, and on top of that, there's no interest. It used to be that we could make 10% return on our money. You had $1 million in the bank, you were living off $100,000. Now if you got $1 million in the bank, you're actually living off of $5,000 to $10,000. There's nobody that could actually retire based on that, and most people don't have $1 million sitting in the bank. So again, we're heading into very, very difficult and confusing times. I appreciate that you've listened to the show, and many of our listeners have been listening for the 16, 17 years that Randy and I have been doing the show together. We appreciate, and that's why we do what we do. We don't charge for anything, for the radio show, for the newsletter, for seminars, for anything. We want to give you the information you need to make an intelligent and informed business decision, and that's what this show is all about. We love our clients. We love the listeners to our show, and all we want is for you to do well, and that's why we allow our Canadian clients only to invest in private investments with my company that get paid in U.S. dollars, and many of my clients are making over 25% a year.
Speak with Harold, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. And Harold touched on it. This really gives you a snapshot of what's happening in the United States. Nearly 7 in 10 Americans have less than $1,000 in savings. If you're wondering why a Bernie Sanders or even a Donald Trump resonates with a portion of the population, there are some people that are very, very mad. and very upset. That's a prime example right there. Nearly 7 in 10 Americans have less than $1,000 in savings. Last year, Go Bankrate surveyed more than 5,000 Americans, only to uncover 62% of them had less than $1,000 in savings. Last month, they did it again. This time they surveyed 7,052 people. The result, 7 in 10. And if you break it down a little further, the data goes like this. 34% of Americans don't have a dime in their saving account. Well, another 35% have less than $1,000. Of the remaining survey takers, 11% have between $1,000 and $5,000, and 4% have between $5,000 and $10,000, and 15% have more than $10,000. Only 15%. If you're wondering what to do, you don't want to be in that position. Speak personally and privately with Harold Siegel about making money in the investment plans that he has. Connect with Harold at 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. We are on today from 2:30 to 3:30 prior to the Oilers face-off show. Oilers playing the Sabres next week. We're on 10:30 a.m. to 11:30 a.m. on Sunday as the Oilers play the Jets at 1 p.m. We're on prior to the face-off show that day as well, and that will be at 11:30 a.m., so keep that in mind. We're going to come back and talk about diamonds, including the Hancock Red Diamond. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 14th, 2016. Our time is 9/11 Mountain. Our radio show normally runs 3 until 4 Sunday afternoon on 630 CHED. Now we are on a little early today, 2:30 to 3:30. The Oilers playing the Sabres, the face-off show coming up here in about a half an hour time. Next week, next Sunday, we're on from 10:30 a.m. to 11:30 a.m. The Oilers playing the Jets at 1 p.m. Winnipeg Jets, and we'll be on prior to the pregame show at 11:30 a.m., the face-off show. Good luck to our Edmonton Oilers today and next weekend. Our featured diamond of the week from rarecoloreddiamonds.com is a stunning .22 carat paracut fancy red argyle. Red diamonds are the rarest of the rare. They're in there with the blues, and we will talk more about that in a second. You can go see our diamond at rarecoloreddiamonds.com, featured diamond of the week. There's a video there. We have a picture in our free weekly newsletter. This is a beauty. Now, the Hancock Red Diamond is a 0.95 carat round fancy red named after the famous collector Mr. Warren Hancock. Now, Hancock originally purchased the diamond in 1956 for a mere $13,500. The Hancock Red was sold in 1987 at Christie's in New York for $880,000, instantly giving it the title at that time of the most expensive diamond per carat, a whopping $926,000 per carat. Hancock had been a diamond collector of colored diamonds all his life until his early death at the age of 65 in 1981. He was a Montana rancher that began collecting diamonds in the 50s. And Harold, you've talked about Mr. Hancock in the past on our radio show, and there's somebody who was definitely a visionary. He was seeing the value in hard assets, rare colored diamonds, and he was definitely a trendsetter back before this market has really started to catch people's attention because of the rarity. That is the thing that really stands out with rare colored diamonds. They are the rarest of the rare when it comes to investment opportunities today, Harold.
You bet they are. And you're right, he was a visionary. He bought that diamond, I think it was in 1950, for a price you quoted around $13,000. His wife poo-pooed the whole idea. She didn't understand, the investment at that particular point. However, when he did pass away in the 80s, she did put that diamond up for sale, and it did sell for pretty close to $1 million. Now, today, that diamond is worth somewhere in the $3.5 to $4 million range. So imagine, back in 1950, a diamond that was purchased for just under $14,000 sold for $3.5 to $4 million. Now, when you look at other amazing diamonds that have stayed in families and sold for astronomical prices, the biggest one that comes to mind is the Shirley Temple Deep Blue that sold earlier in the year. Her father bought it for, what was it, Randy, back in the 40s?
It was 1940, birthday present, $7,200, and we believe it sold privately for over $25 million.
Right, and he bought it for, what was it, under $10,000?
It was $7,200, yes.
That's what happens with these type of investments. These are not short-term investments. These are longer-term investments that build tremendous wealth. We try to do that when we invest, for example, in retirement savings plans. The government makes it available for us to, put money away without paying taxes on it a certain amount per year, and we can invest it in certain investments that the government approves, mostly stock and bond-related type investments, and then you can build your wealth over a longer period of time, and then when you're ready to retire, you have a nest egg. The problem with that is it doesn't work. Nobody makes money in retirement savings plans. I'd say 90% of the people that are in RRSPs in Canada right now haven't made money in the last decade. So what is the purpose of putting your money in a retirement savings plan when all you're doing is delaying the inevitable, which is you're not going to make any money, and then on top of that, you're going to pay your taxes, and you didn't accomplish what you originally set out to do. There are alternative investments. There are investments outside of the stock, bond, real estate markets that are much more conservative, but much more profitable than putting money into a retirement savings plan. In actual fact, many of our clients have opted for some of our private investments because the payouts are way higher than what you would ever get in a retirement savings plan. So at this particular point, you really got to sit back and understand what type of investment world we live in today and what your opportunities are. And there's not too many opportunities. Things are so risky right now that when we look at an investment, the first and foremost is capital preservation. Am I going to lose my money, or is my investment safe? And then number two is capital appreciation, making money on your investment. We all understand that we work extremely hard, and we have to invest money in order to be able to reach our goals, which is hopefully one day to retire and to be able to help our kids and grandkids. Well, I think in this type of environment that's almost impossible for most people. In fact, people that wanted to retire in their 60s are still working in their 70s. So there are alternative investments, and it just so happens that rare colored diamonds are one of them. These are assets that never decline in value, that go up by 15-20% a year or more, depending on what type of diamond you have, and they're portable private wealth. Means that you can travel with them, means that they can be sold in other currencies, and that's probably the most important thing. Many of my Canadian clients that own diamonds over the past decade, for example, many bought them when the Canadian and American dollar were even. Now the American dollar is worth almost 30% more. That means that not only have the diamonds gone up in value, but so has the currency, meaning that our clients have picked up almost 30% just on the currency alone. And we feel so strong about the U.S. Dollar that we believe that the U.S. dollar is going to be the strongest world currency, and we could make 50% return on our currency alone. So please let me show you how to do that. It's really not that difficult, but we're not in risky markets. We're in very conservative markets that have proven track records and that will do well for you. And again, you need to get money out of Canadian dollars and get them into U.S.-based dollar investments. So that red diamond was a phenomenon, but there's been so many cases of people that have bought diamonds, and over 10, 20, 30, 40, 50 years, the price of those diamonds have absolutely skyrocketed. In fact, some of the biggest returns ever have been in the diamond market. I've said many times about my wife's girlfriend, who inherited a 5-carat pink diamond from her grandmother recently. the story was her grandmother bought it 50 years ago for $50,000, and that diamond today is worth $5 million. You know, the thing is that many of us, when we do work out our wills and things like that, we don't need all of that money to retire. So in a lot of cases, you're going to want to give some of these assets to your kids and grandkids, and that's where family wealth is really built. When you give a diamond to your grandchild, and that grandchild holds on to that diamond for another 30 or 40 years, do you realize that even a $20,000 diamond could be a $100,000 or $200,000 diamond? So again, you need to look at alternative investments that are outside of the stock, bond, mutual fund, and commodity markets. We don't leverage. We don't take unnecessary risks. We are extremely conservative, but we know the markets extremely well and have been able to get much better returns than the mainstream is offering. So, again, if you need additional information as to what you can do with your retirement and your money, give me a call. I'll spend as much time with as you need and discuss what your options are and explain, more importantly than anything, the currency markets to you, because if you don't understand currencies, you're never going to make the money that you need to make, and that's one of my major areas of expertise.
Call Harold. The call is free. Everything discussed, 100% confidential. That's important. 1-800-432-1022. 1-800-432-1022. RareColoredDiamonds.com is the website. And we really have a museum piece this week. It's one of those diamonds that's so rare. RareColoredDiamonds.com, featured diamond of the week is a .22 carat pear cut fancy red argyle, .22 carat, and it is a beauty. See it online, RareColoredDiamonds.com, featured diamond of the week. It really has been the year of the blue diamond. And coming up on Tuesday, Christie's has an auction in New York City. And more than likely, we'll have some good auction results for you on next week's show from Christie's. But Sotheby's, they have an auction coming up too. They're auctioning off what they call the Sky Blue Diamond. And the estimate on it, $15 to $25 million, so roughly $25 million. And it is 8.01 carats. It's a stunner. It's been described as wonderfully clear celestial blue, according to David Bennett, worldwide chairman of Sotheby's International Jewelry Division. The color of this diamond is no joke. The diamond is expected to bring up to $25 million at auction when Sotheby's has their Geneva jewelry sale on November the 16th. And the GIA has given the Sky Blue Diamond the highest possible color grading, fancy, vivid blue. This places it in the top 1% of all blue diamonds that the GIA grades. Further, the stone has been categorized as a rare Type 2B, an honor that is bestowed upon less than 0.05% of all diamonds worldwide. And it has a square emerald-cut gem, and it's set in a mount by Cartier. Now, it's interesting to note the auction house has broken world record prices for blue diamonds over the past 2 years. Recently, the Blue Moon of Josephine selling, and a 12-carat stone purchased for $48.5 million, November 2015. That meant the carat value is $4 million. Other notable blue diamonds sold by Sotheby's include the Zoe diamond, a pear-shaped gem, generated $32.6 million in November 2014, and a 10.10 carat oval-cut Millennium Blue that sold for $31.8 million in April 2016. And of course, we can't forget about that big blue diamond that sold for $57.5 million earlier this year. But Harold, so far, it has been the year of the blue, but we really encourage people to take a look at our featured diamond of the week, which is the rare red. If you think blue is rare, then you're really getting into the rarefied air when you take a look at red as an investment, because it's one of those things so hard to find, and when you do, it's one of those things that you hate to give up. So it's a catch-22. People invest in them. They don't necessarily want to sell them because they're so rare. They know they're going to continue to go up in value. but even when one does come on the market, it's so special because you're dealing with the rarest of the rare investment and the rarest diamond on the planet. It's very exciting, Harold.
It certainly is. You know, reds are extremely rare. Most people don't even know that red diamonds exist, and those that do know about them always ask if they look like a ruby. Once you see a red diamond, you know that you've seen something that is so rare and so special. I've sold 5 of them in my career, which is probably more than anybody has sold, and I own 3 reds myself in my own collection, so they're tremendous. Blues, just so you know, back in 2005, a vivid blue diamond sold at auction for around $200,000 a carat. Now they're selling for over $4 million a carat, and that was only 11 years ago. So you can imagine how these diamonds continue to go up in value. Blues have just set records almost every single auction. So what is the next trend in diamonds? Well, first of all, the best investment diamonds to buy right now, there's no doubt, are pink diamonds. The Argyle mine in Western Australia produces 90% of the world's pink diamonds, and they're going to close by 2020. It means that we have basically 3 years, which is very short term, and anybody who owns pink diamonds should see a sizable return on their investment. Now, the game plan is that the mine is going to close in the next 3 years. Give it 2 or 3 years for all the diamonds to run out, and we believe that we will see massive returns in the pink diamond market. We're also miners and cutters and polishers of very rare diamonds, and the diamonds that we're cutting now are greens and orange diamonds. We feel that that is the next major trend, and where they're still reasonable in price, you're going to start to see that the prices are going to get into the millions of dollars per carat. In actual fact, this year, a vivid green diamond sold for $15 million, $3 million a carat. Nobody saw that coming, except for us. We've been cutting green diamonds and introducing them into the market. They're some of the rarest diamonds in the world. The diamond can only turn green when uranium seeps into the ground and turns that diamond green, just like boron would have to seep into the ground to turn a diamond blue. A diamond could be white and worth about $20,000, but if that same diamond turned blue, it could be worth $4 million. That's how rare colored diamonds are. We're extremely proud to be able to bring this to our clients, that they are by far the best long-term investments that you can get.
One thing to keep in mind about the Argyle pink diamonds, they have the pink Argyle tender, and that tender has traveled the world, and those that have placed bids, it closed here a couple of days ago, October the 12th. The bidding is now done after it traveled the world. Bids were placed, and we should know probably within 2 weeks to a month, I'm guessing, who actually picked up the stones. It is private, but they do give us an indication of price increases, and sometimes they do mention names. If a person is okay with having their name out there associated with purchasing a diamond from the Argyle pink tender, they will mention names, but keep in mind that is now closed as of October the 12th, and we will find out here probably in the next month or so exactly what happened with the Argyle pink tender. But as Harold was saying, only a couple of years left. They may have some diamonds in the vault for a year or so after that, but then it is all over. This week's diamond is a .22 carat pear cut featured diamond of the week, Fancy Red Argyle. See it at rarecoloreddiamonds.com, featured diamond of the week. And as we touched on, the Hancock Red, a .95 carat round fancy red. Mr. Warren Hancock purchased it in 1956 for $13,500. It was sold at auction in '87 for $880,000, $926,000 per carat. And as Harold mentioned, a very similar story to the blue diamond that Shirley Temple was gifted by her father in 1940. Sold for about $7,200. Her father bought it, invested in it at that time. Sold with her estate recently here at auction over $25 million. And Harold, that is the beauty of this market if you just give it time. And in the meantime, though, this is the beautiful part about it, you can be wearing the wealth, the investment that you have obviously put your money in. You can walk into a room and be wearing on a very special occasion one of the rarest, most beautiful diamonds on the planet. And I think that's the thing that excites me the most. It's a dual situation. You can not walk into a party, as we like to joke in the past, with a stock or bond certificate on your ring finger or around your neck. You will look funny. You'll look very funny. But you stand out and grab a lot of people's attention when you walk into a party with a diamond around your neck, your ear, obviously ears. You got your fingers, maybe on your lapel. That's the beautiful part about investing in rare colored diamonds. They're rare, but you can wear them as well. And Harold, we have one of the rarest with our featured diamond of the week. And I would imagine a diamond like that, and we have about 4 minutes left here in our segment, will go very, very quickly because people know that they're very hard to find and invest in.
Better believe it. Again, there's very, very few red diamonds that ever become available. There's some in the Argyle tender this year, but they get bought up right away. And you very, very seldom ever see a red diamond come up at auction. They're held onto because, again, they're nearly impossible to get. So, you know, you don't have to be a multimillionaire to invest in diamonds. Many of our clients invest $20, $50, $100,000 in a diamond. And, again, we buy yellow flawlesses. We get Argyle pinks. We're now mining green and orange diamonds, the next major trend. The Argyle pinks are going to skyrocket because of the mine closing down. There's tremendous opportunity, and all of these investments are based in U.S. dollars, which is extremely important. So give me a call. Let me explain what our options are. Not everything is buying physical diamonds. We also allow our clients to invest in some of our parcels of rough, uncut color diamonds that pay over 25% a year. So give us a call. We'll explain to you how this works and get you making money.
You know, it is very hard to retire today in the financial world we find ourselves in. Everyone is worried about losing their retirement money due to another financial crisis, and a lot of people are predicting that one could hit very, very soon once they start to possibly raise interest rates. Will we be ever able to retire? And with low interest rates, central banks have manipulated stocks, bonds, and real estate to a point where they're historically overvalued and could face a major correction at any time. And what does a person do with a Bill C-15, as we have here in Canada? That means that investors will be bailing in the banks. If a bank goes out of business, that means anybody over $100,000 will be bailing out that bank. We're in a time of negative interest rates. Weak Canadian dollar, oil prices down, possible housing crisis here in Canada with Vancouver and Toronto. Lots of talk about a cashless society. Lots of financial questions today, and people are looking for answers, and that's why we do our radio show. I know that Harold speaks with many of you on a weekly basis, and if you would like to talk with him personally and privately about investing in hard assets, getting some money out of the Canadian dollar into U.S. dollars, if you're a snowbird, call him at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. And Harold, with about 30 seconds left, another very interesting show, and we thank you for your knowledge.
Well, it's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Don't forget, we are on just prior to the face-off show today. The Edmonton Oilers playing the Buffalo Sabres, coming up here at 3:30. Next week, we will be on Sunday morning, 10:30 to 11:30 in the morning. The Oilers are playing the Winnipeg Jets at 1 o'clock. We're on prior to the face-off show at 11:30 a.m. Good luck to our Edmonton Oilers playing the Sabres this afternoon. Good luck to the Oilers throughout the week as they play their games, and we will talk to you next week, 10:30 to 11:30 a.m. Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com is the website. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.